policies. And you can see now, in a perfectly timed storm, that all these earnings are coming out, growth is anemic, and they're talking about everything except the economy.
She actually wants to make the tax code more complicated than it already is.
Raise
It's the
taxes,
complete
yeah,
opposite from what you hear on the Republican side. I want to ask RJ, though, about the overall valuation of the market. As of midday yesterday, 17.8 times forward 12-month earnings, and that's a premium to what we've seen in recent history. Does the market really look like a buy here?
Well, my equity colleagues have been a bit cautious about the U.S. stock market for significant portions of recent weeks. Obviously, we're quite a bit off the lows, as I mentioned before. I think the equity guys here at Federated would agree that the market doesn't look cheap. We on the fixed income side are focusing primarily on valuations on the rates and the credit spread sectors. On rates, we think rates should back up a little bit from where they are. We've seen some of that in recent weeks, but the relatively muted pace of growth that we just discussed should top them off at a pretty moderate level. And then on spreads, we continue to remain positive in the parts of the fixed income market of the more economically sensitive, credit-sensitive assets like high-yield corporates, which we still like.
Yeah, so
the equity market and high-yield corporates are obviously related.
Yep.
The earnings season is very important for both.
But you also have the Fed meeting and the Bank of Japan meeting. How does that play into all of this, RJ? The Federal Reserve kicking off that two-day meeting today. Are you expecting a move in interest rates? And what are you expecting out of the Bank of Japan come Thursday?
Well, here in the United States, we don't expect the Fed to change official interest rates at today's meeting. It starts today. Of course, we'll get the results tomorrow. The improvements from the crazy start of the year have been just too tentative. The economic momentum, as we mentioned, has clearly slowed, even if we're expanding at very marginal rates. I think it's highly unlikely that the Fed would move official interest rates at this meeting. All eyes will be on the tone of the Fed's statement. That first paragraph in the FOMC statement describes how they see the economy. How will they assess the first quarter slowdown that we're obviously going to see in the data in a couple days? How are they going to assess the improvement in financial conditions, which is obviously stimulative? I think on net, they're on hold.